Hi everyone, I'm Valentina Sanchez Cuenca at the Latam team with the bird. This is a follow-up conversation from our latest segment. So guys, where's the trade?
Okay, thank you, Valentina. Where is the trade? Wall Street's full of so much jargon and a lot of baloney. And like, let's keep it simple. We're going to look at the TLT. We're going to look at capitulation. James, what was your takeaway from the last segment?
Well, from the last segment, it's really, a serious dive into the credit space right now, and it's about the speed of acceleration with these, triple C's selling off, and that's always an ominous sign. But Larry, the big question for me, as I'm basically what you would call in the camera world a prosumer, so I'm a total amateur. But you've been a great mentor for me over the years. I guess we've now been trading options together for 15 years, and you made a man out of me so far, I would say. But I wanna just ask, when you see a Fed meeting like Powell did yesterday, obviously very scripted. He was reading from his sheet, and then the markets react in such a positive light today. You see great earnings coming out, you see the markets rallying, you see, there's basically a sense of like almost a euphoric relief slipping into the markets. But, I follow your brilliant kind of intel through the Bear Traps report, as often as I can, maybe read it 3 or 4 times a week, always read the Sunday Turning Point. I love it. And yeah, it's pretty bearish. I mean, there is nothing that says, we're turning around and we're gonna get into a bull market soon. It's no, it's like you're gonna short the rallies in the Nasdaq. You're gonna short the S&P 500 under a certain level. And, I think if the SPY is under $450, it's a screaming short. Like you wanna be selling the rallies. You don't want to be buying those dips. But today, I'm looking at all these great earnings coming out, like Starbucks is killing it, but at the same time, you see, banks tightening their lending standards, and I heard some horrifying report that 12x on auto loans moving from prime to subprime in a matter of a couple of months. And this, and by the way, another chart, you were talking about TransUnion and Equifax in the previous podcast. There's a there's a chart on consumer credit that's blowing out. I mean, apparently credit was really improving during the pandemic because I guess it was about a lot of relief checks flying around and people were able to pay their debt off, and interest rates hadn't actually gone so high yet. But now, like, credit scores across the board, they're looking like triple C 5-year CDS.
Okay,
So,
so
so
that's
my
a
my
lot. So let's have a conversation. Let's not, let's gonna go back because you made 5 points. So let me address the first one. So what's happening at the end of the year? We're not necessarily bearish as a whole. Like there's parts of the market that are screaming buy. This could be in my career. This could be one of the great tax loss selling opportunities that we've ever seen. And so if you look at the S&P or the Nasdaq, because they're controlled by 12 companies that make up a large portion of that index, those indices are really expensive. But under the surface, you have an incredibly high number of companies that are in deep capitulation. And as you said, you wanted to get into barrels, right? So look at the setup with the TLT. Now, this is a government bond fund. We've had 3 years in a row where bonds have been down. It's literally hasn't happened in 100 years. So the capitulation score we're getting on government bonds is extremely high, and this points to a bottom here in the TLT, points toward possible rate cuts, points toward a softer economy. It's bad for companies like Apple that are trading at 7 times sales when historically the last 40 years is traded at 2 to 3 times sales. So when we talk about this chart, James, we're talking about getting into capitulation trades in thirds, right? So that is that the way
right.
you understand as someone that consumes the product?
Well, that's right. Yeah, and so the point I was just trying to make was really about how the narrative is so different on a daily basis. So, how does an investor navigate this stuff, right? And you always say we're buying a third of this, we're going to two-thirds of this, we're unloading a third of this, and I always thought, well, if you're three of three at this capitulation level, hypothetically speaking, why don't you just go all in here, and then when you start selling it, I'll just go all out. But at that point, you shortchange yourself so much. So is there like a formula that professional traders use to manage portfolios and get cost basis down and not miss the boat? I mean, how do they do it?
Well, it's a great question, and there's an old saying, and when I was first coming up in the business in the '90s, my manager came on the trading floor and he said, "Only monkeys pick bottoms," right? So it's a funny old line. It's been around Wall Street, and the point is to say you have to average into capitulation trades. You can't go all in. Nobody knows where the bottom is, right? But one thing you do know is if you average into capitulation opportunities, that's where the real money is made. So one thing that's fascinating, James, about technical analysis and Twitter, when I started in the business in the '90s, you'd get these by the mail. You'd get these technical analysis books, and when stocks broke certain trends, people would sell them, and you'd see capitulation opportunities develop. Right now, because there's literally thousands and thousands of amateur technical analysis services on Twitter, people that have really, don't have that much experience at all. They don't understand credit. They don't understand Eurodollar futures or SOFR futures. They don't really understand the Fed. They try to sell the services as just technical analysis. We think that's a lot of bullshit. And I would say that technical analysis is extremely important, but it's like in golf. You want to have 14 clubs in the bag, and technical analysis is one of them. But one of the things about capitulation is because there's so many people on Twitter doing the same thing. So when a stock breaks a certain trend line, the capitulation today in certain stocks, or like the TLT here, people typically in technical analysis and on Twitter, or just any one of these services, they will all puke out of a stock at the same time now because they're all doing the same thing. They're buying breakouts, they're buying up trends, and they're all doing the same thing. It's like monkeys doing the same thing. So when you have a trend line break, the capitulation opportunities now are more significant than they've ever been in the last 20, 30 years because everybody's doing the same thing. So what we do is we'll typically add into a capitulation process, but what we're looking for on the chart there is that climax in that volume. That's a sign that you want to be going toward that 3/3 position, and you want to be looking for positive divergence. And all that means is you see the bottom, you have two lows there in the TLT. That low where it says bull hammer, that's a low and then a rally. You see
Yeah.
that RSI, the oversold level, was much more significant. And now we've gone to a lower low, and that positive divergence is actually not as low. That's a sign of seller exhaustion. And so when
Hmm.
you go to 3/3, James, to answer your question, you're looking for those signs of seller exhaustion. So right now, we recommended the TLT, I think last week in the turning point. Valentina can share that with you. But that's how we measure capitulation.
I see, I see. So, what are your views on, Powell's speech and the market rallying today? Do you feel as though this is just setting itself up for another sell-off?
For the indexes, yes. For year-end tax loss opportunities, I think you're going to be able to probably you get a climax in tax loss selling. I think around November 15th to November 30th. Some people think it's later in the year. I think it's typically mid to late November. But the indexes are set up really poorly because we're rallying on equities because of relief that the Fed's done. But the Fed's done because of the rate of change of consumer data that's shocking so many different companies in the S&P, like the breadth inside the market, like the percentage of stocks that are above the 200-day moving average, hit this week like 25%. So there's a ton of pain. The market's already crashed under the surface. We've already crashed. Like banks are down, 40 to 60%. Consumer stocks in the retail XRT ETF are down 40 to 70%. And so we have multiple sectors that are already gone through crashes. And but the index hasn't, because everybody's hiding out in those 12 names, and that's keeping the indexes up. So I think toward year end, the indexes, you want to sell the rally in the S&P below 4,400, 4,500. That's where you probably top out. And think about earnings. Think about
And if it
S&P.
goes
So
above
the S&P,
4,500, Larry, just to interrupt, if it goes above
yeah.
4,500, do you cover and then go long?
Well, I think, yeah, if it goes above 45.20, 45.40, you have to start thinking about covering your shorts. I wouldn't go long just yet, because the Fed we're not in a cutting cycle, and the peak, or here's the problem with earnings, right? So whether you go long or short. So the S&P is supposed to earn this year $230, right? And if you just do the math, like typically in a multipolar world with higher interest rates, and that's what we've moved into, it's a regime change. Typically, the S&P should trade at 15 times earnings in that type of world, like it did in the 80s or like it did in the 90s. But now we're up near 18, 19 times earnings in the Magnificent Seven, or the big multi-mega cap stocks like your Apples. These things are trading; those stocks are potentially in some places near 40 times earnings, right? If you look at like Nvidia, if you look at Microsoft at a very high multiple, so that's holding up the index. But if you think of like 15 times $230, you're in the low 30. I think you're close to 3,300, right? But say the S&P earnings, because of softness in the economy, and that's what the Fed's trying to create. Say the S&P earns, say, $220 or $215, then say you're at 14 times. Next thing you know, you're down near 3,000 in the S&P. So at the end of the day, we're up near 44, 4,500. Well, right now, I think they're in near 43. We're up there because of these 12 to 15 stocks. And in past decades, markets traded at 18 times, 19, 20 times earnings. But now we're in this multipolar world as we get into in when markets speak, where you've got higher interest rates, higher inflation, power of labor has never been stronger. You've got all kinds of strikes in the United States. All this is creating sticky inflation, higher interest rates globally. The Bank of Japan now, for the first time, is actually a lot, actually not buying as many bonds, and so yields are drifting up. And so all these things point toward a different type of world, like a 1968 to 1980s portfolio. And I think that's what shows us as we're looking down the road ahead.
Right, right. So, just from a trader's, if there are some real traders out there that love to play in the option space, that love to put on short trades and stuff, what would you suggest that they hit at a rally, and what would you suggest that they go long when you get a nice sell-off? I mean, what are the stocks that they should be bullish on and likewise bearish on?
Well, thank you, Chance. The capitulation score that we're getting on the biotechs is close to a category 5 capitulation. And so if you think hurricanes, it's been pretty spectacular. And if you think of AI, a lot of people are getting sucked into the infrastructure of AI, but they're not looking at what companies are actually going to benefit from AI. So artificial intelligence potentially makes biotechnology companies a lot more profitable. It speeds up, potentially the trial process. It speeds up discovery. And so the capitulation in the XBI, for example, which is the biotech ETF, is for a year-end tax loss play. I really, really like that idea. Also, cannabis, the MSOS, your capitulation score there is close to a category 5 as well. And in Washington, I was talking to the team at ACG Analytics in Washington. This descheduling thing is just incredible, James. Like, if you think of like heroin and really nasty drugs, like they're classified in this category of scheduling, and cannabis is still in that group. If you have that descheduling to a lower grade of criminality, it allows these companies in the MSOS to finance themselves, have much better tax benefits. And so the capitulation score between, on the XBI and the MSOS, we could see 30 to 40% rallies in the first half of 2024 for these washed out sectors.
Right. And when do people buy back their stocks once they get rid of them for tax loss purposes? You say November 15th is the climax, but do they then buy them back in January?
Yeah, so if you want so in years where, and this is very interesting, in years where there's a lot of divergence between winners and losers in the S&P, you get much bigger tax loss opportunities. So right now your Apples, your Metas, your Nvidias, they're up a lot. So people have some gains. And so they're, those gains create, massive divergence between winners and losers. And so if you sell, say you sold one stock I really love for year end is Southwest Airlines. We're picking up a really high capitulation score there. If someone sells it today, they can take the tax loss and buy it back in 31 days. So what happens is you got millions of people doing the same thing. And so they're selling in November and they'll be buying back probably late December, early January. That's what creates this, what's called the famous January effect. And so
Right.
this year, because of all that, because of that huge spread between winners, people need to sell the losers more than ever. So it creates more of a capitulation opportunity in the fourth quarter than we've seen in recent years.
Mm-hmm.
But I think
I
that I
see.
think that's good, Jay. I
Yeah,
think
I
that's
do
good.
too. So today's trades, you would be getting long XBI and LUV, that's Southwest Airlines, right?
Yes, and MSOS
And
for year
and the
end tax loss.
cannabis. Right. Exactly.
Yeah,
Brilliant. Not bad for a daily trade.
yeah.
And
And
how long do
so
you think
so
this goes? This S&P is going to go up until where? Like, that on the SPY, the 450 range, or do you think it stalls around 430?
I think Apple tonight could really move the market. I think that it's the generals and the Magnificent Seven, four out of the seven really kind of laid an egg relative to expectations. And
Yeah.
so I just don't see a ton of runway here with interest rates as high as they are in the fourth quarter. You can if you can put $1 million in a money market fund and get $50,000 a year of interest. In 2 years ago, that was $1 million in a money market fund paid you $7,000 a year of interest, right? So the propensity or the incentive to go to cash in year end is extremely high.
It is. Wow. All right. Well, thanks,
But
Larry. You're always a wealth of
yeah,
knowledge.
thanks, James and Valentina.
Yeah, thanks, Valentina.
Yeah, as mentioned on this call, we have a magnificent weekly macroeconomic recap called The Turning Point. Again, I'm happy to share that with you. You just have to reach out to me at valentina@theredshopsreport.com. That's valentina@theredshopsreport.com. You're also going to have it on the link on the description below. Thank you so much, everybody.